Hi, welcome to the Investment Meta. My name is Chester Johnson, and I'm the co-founder of Stockteamup.com and the Stock Boss app. Before we begin, please like and subscribe to our channel, Stockteamup. This week, we're talking utilities, the boring sector of the stock market. With Q4 and 2020 just around the corner, can utilities be viable again in this meta? Looking back through Q1 and Q3, utilities were not a viable choice so far. Overvalued before the pandemic and stagnant after the stock market recovered, utilities were not giving its investors what they were looking for: low volatility and consistent dividends. Can Q4 turn that around? Well, we'll see. So why utilities in the first place? Why not just get on the tech train? Well, utilities have an important place in our portfolio. Utilities act like a dampener. When the market goes up, a lot of utilities follow, but not that much. If the markets fall, typically utilities won't fall as much. Also, they typically give a healthy dividend. So while you wait out a market collapse, the utilities are giving you cash dividends while you wait. But right now, some headwinds are happening going into Q4. The top 5 utilities by market cap give you an average dividend of 5.02% annually. That's fantastic, especially since a typical T-note may give you about, a 0.66% return. That's nothing compared to 5%. But read the investor reports from these utilities, and you'll find that these dividends may be at risk. The problem is that we are at a critical point in the current meta for utilities. Utilities are investing in renewable and alternative energy sources. A big example of this is nuclear plants being built by Southern Company or Dominion Energy building wind turbines. But this is just the tip of the iceberg. Regardless of what you believe about global warming, it is very obvious that the utilities believe that they need to invest in renewable energy. It is also very interesting to see that utilities are putting more emphasis on unfavorable weather events. Digging deeper into their investor presentations, you can see that utilities get a windfall from some weather events. Like if it is hotter, people are using more air conditioning, which means that they're using more electricity. But for the most part, they are seeing weather that is not normal, and so they are adjusting their earnings forecasts to show that. And with all this uncertainty, this is why I believe utilities will be more volatile moving forward. So utilities are risky. Buyer beware. Thank you guys for watching. Please subscribe to the Stockteamup channel. Please like it and check out the Stock Boss app. Thank you for watching. So I've been fortunate enough that people have been asking me questions about investing, and I thought that at the end of these videos I'd answer them. If you want to ask me a question and be part of one of these videos, just go ahead and ask your question in the comments of this YouTube video or this Facebook post or wherever you're seeing this at. So I got 2 questions that I'm going to answer this week. The first question is, do you think there's a benefit from trading option contracts? Why or why not? So option contracts help you make money regardless if the market is going up or down or sideways. They also are an insurance policy against sudden falls in the market. I never recommend anyone day trading any assets unless they can commit 6 hours to it during trading hours. This includes options trading. However, if you're a long-term investor, you can get an edge because of your patience waiting long-term. And long-term investors can use options to add income by selling options or increasing asset appreciation by buying options. Options are very risky if you don't know what you're doing because the option can lose 100% of their value upon expiration. So please be careful when you put options into your long-term portfolio strategies. The other question that was asked to me was, please provide what 3 qualities make a successful trader. I gave an answer for traders and then I gave one for a long-term investor. So for a trader needs to be analytical, they need to be disciplined, and they need to have a feel for the market, which usually comes from experience. That way, when they interpret the charts that they're reading, charts aren't a pure analytical way of looking at the market. There's a lot of feel with it based on how the market is moving. You're talking seconds or minutes of making decisions based on a feel in the market. For a long-term investor, I think that having emotional control, a belief in yourself first and not following others immediately, and patience is very important. Those are the three things that a long-term investor really, really needs to have. Thanks for watching this. I appreciate it.